Hello traders, this is a video inspired by some questions that I have received on my email yesterday and on previous days. Basically, uh, trading with support and resistance zones, or trading in general, when and where to enter, when to enter position. So trade plan, like my morning notes, it can prepare you so you would have realistic expectations for today. It can even plan some of the trades in advance, but you also have to be able to read market in the real time, and that kind will come with experience. Now, plenty of screen time is needed to learn how the instrument that you trade behaves and what is it usually does, in repetitive situations. So the question was, I had, as you can see, corresponding with some with another trader, and one of the questions was about yesterday trade, so February the 4th. And the question was about this first short trade. It was described in the trading video, and it is this situation here. So here's the question from the email. He said, I'm struggling with deciding when to take a trade at a zone. When price reaches a zone, is it an automatic buy or sell, or if it is a strong zone, or do you wait, for example, a 5-minute candle to close? For example, when price reached, and this is the situation here, 11/2012 this morning, that was in the Friday high zone, and pre-market high was also there, as you can see. And it was the first test of the zone as well. So with the confluence of these factors, would you try a short immediately or wait for some confirmation or reversal? This is a universal question, and basically the trader answered himself that. Why? Because as he said, it was in the zone. So zone itself is a good reason for us to attempt a trade if the context is right. What was the context? The context was that the market was trading inside a range and the market is in consolidation mode. When the market is in the consolidation mode, that is the time when fading the zones works really well. So that was a zone, that was a first test, and we had the pre-market high inside the zone. All of that, and on top of it, market opened at resistance. Now, whenever you have situation similar to this, the market is opening at resistance. First step usually is that it is going down. It is usually the first step. When the market is opened at support, it will usually first at least try to go up. And if it can't, fail later. Open drive through the zone and breaking the zone are rare things, and market will show you that it is ready to do that, like today. Today is February the 5th, and as said in the morning notes, market is prone to make a break. I said in the morning notes, DEX is lagging behind and there could be attempt to break above the small range, and you would know that because this is that small range and market that started from here, and from this stops here, and market tested it once, tested it yesterday twice, and now we have this today again, similar like the break above this main support zone. So that is exactly what I have replied to the trader in my reply to him. Good morning. Answers when it has opened right at resistance, and when you look at this is 4-hour chart. When you look at these ranges, the smaller the amount of points inside the range. So those ranges that are thin ranges, like 100-point range or even less than that, it takes smaller amount of time for it to break. This was 7-day range, and on the 8th day we had a breakout, and I have warned you in advance of that, and it's not really crystal ball thinking. It's just sitting there and watching these German DAX for many years, and then when to expect such things. And market is showing you. It will show you either by making a series of lower highs and making basically a rectangle and then breaking it, or they will repeatedly test resistance. And we had a test that day before the breakout day in the after hours of previous day, and those tests will come. The time between the test is going to be shorter and shorter, and testing, and then they will break a zone. And that is the only way that we are going to buy a resistance. You're basically buying a break, because now you can feel it is coming. You will not try to do that here, because that is the first or second test of the zone. But when the zone has been tested multiple times, they're banging and banging and banging and banging, and finally they are going to break that zone. So now, where were those questions? Yes, in this case, this was the case. You will short immediately. You will short immediately. This you will not wait for the confirmation, because the target here. The target was very small. So if you are wait for some kind of confirmation on the first test, you don't wait, because if you are wait, then you will miss like 10 or 15 points. And if you miss those 10 or 15 points and your target is just like 30, 40, 50 points top, then your risk reward is skewed. It is hard enough in this kind of environment, when the range is too small, to get to our trade. So we don't want to wait too much, because then the target is small. And if you bank at 20 points, just 20 points, and on the second trade you will lose like 25 points, then you got nothing. You're down. So you got to have at least 1.5 risk reward at your side. So there is no room for you to wait on the first test. This was here first test. This here was the second test, and now you're waiting, because you're observing this. Now drop, bear flag, drop, testing the zone. Now they're hanging there and then dropping, making a false breakout. Now you are going to wait. And those deciding, are you going to wait or not? It will come with experience, but rule of the thumb, so to speak, is first test of the zones. You will approach it more mechanically, and like late Mark Douglas used to say, when the pattern presents itself, there is nothing to think about. You just take the trade because you have an edge. You have an edge there, and the edge is inside this question. It was the Friday high zone, it was the pre-market high, it was the first test of the zone, and on top of it, market opened there. And there is also something here, and which is very important. And I will show you now this text. It is in form of the picture that I was having on my desktop as a wallpaper for many months, and also on Twitter as a pinned post. This is something from a mini player, Avais Bukhari, who is doing this for the S&P, for A-mini traders. I was his client for 2 years, and improved my skills, sharpened my skills with him, especially in this department about expectancy. What he said here, that there are many traders are wrongly working on improving the ability to predict which setup is going to work and which one is going to fail. So you're not trading to not lose. You're trading to win. If you're trading to not to lose, then you will miss good setups and inevitably still end up taking the losing ones, as he said. He said that in November 2016. And this is good stuff. And now, what about entries? When to take a trade? So, more mechanical approach on the first test, more mechanical approach on the main zones. And this in between is more discretionary. You really need to, as I said, morning plan can prepare you, but you need to be able to read the market in real time and then to decide, are you going to skip a zone or not? Because every zone are there and on the chart and had 3 reasons why is it on the chart. It is on the chart because it can represent an entry point, or it could be second, or it could be an exit point, and third, it can be a gauge of the market strength. So some of the minor zones are there just to gauge the market strength, and also you can use it for partial exits, but you will use them as entries only if there's something else with them, like a trend line, pre-market high-low, fib retracement, something like that. So entries generally, this is this another file for that. Generally, entries in neutral low opportunity markets like this, it is going to be usually inside of the zone, like this. And when you're trading more volatile, higher opportunity markets, then you will front run the zone or be at the edge of the zone. And why is that? So imagine that this here, the market is more volatile and it just goes just this, like bang, 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 200 points. So your target, you could land even 200 points, in a day trade. It is very rare, but it is what can happen in some days. In a vast majority of days, vast majority, more 90% plus days, everything above 50 points in DAX trading is really good trade. So we had really good months like December, November, December, October, fall, when volatility was higher and you can land 70, 80 points almost every day in a single trade, and you can pretty much land 100 plus points. And in that case, if your target is like 100, 120 points, then you can front run a zone, and you will front run a zone to get a feel, because you don't want to miss it. But now when the trade is like 30 points, you don't want to front run the zone. Usually don't want to front run the zone because market is prone to make false breaks, and if you front run the zone and then market makes a false break and you're stopped. Basically you're stopped. And it is much harder then to accommodate that minus 20, 25 points than in the higher volatility markets. When you can have 2 losses in a row, and starting from minus 50, you will end the day with plus 100, because in one trade or in 2 trades you will have plus 100 or plus 150 points. Now it's not the case, and now your entries are more conservative. And whenever you fight a strong momentum, you see the market is rushing through the main support zone, but you in the same time expect the market to bounce from it. And you see good momentum to dance. Then you will place your resting order at the bottom of the zone, or in the lower half of the zone, or wait to see if there's going to be a false break and then entry when you are sure, like this trade here. It would be the same, but your approach must be different for up market, for down market, or sideways market. And these questions are really universal, whatever the instrument that you are trading. When to enter and where to enter. You know, and in day trading, we don't have that luxury to wait for confirmation. In most cases, we must enter immediately because many trades are fades. Many day trades are really fading the zones like this because market really stays inside of the range for many days. As you can see, this is what market does. Going up, then chopping around in a range for many days, then one day this is one trending day. This is one trending day. In between, it's just a range. So you have to learn to trade the range, and really trading the range is nothing much, but you have to be decisive. That is the absolute most important thing in trading these kind of ranges. Is decisiveness, not thinking is the setup is going to work or not, because you have really to trust the long-term expectancy and to trust the zones. And you have seen that the zone trading is working, and there are a library of videos from October to this day, and you can see for yourself every single day is covered. And this is your best trading edge, good trading location. If you have additional questions about zones, about when and where to enter, and you would like to see another video of some other subject, please feel free to contact me on Twitter at this handle or at my email, which is straydogtrading@gmail.com. And this is it for this educational video. I hope you liked it, and I wish you a good day and good trading.